Hey guys, what's going on? It's Frequency. A lot of you who are here already know that how I made my $11,000 into $90,000, and those who are new here, I recommend you look at my last two videos, okay? Not necessarily the whole thing, but just to look at them and say, okay, I get where you're coming from. So the furthest one back is the video I made about Dare, and that was a stock that I predicted that was much like this one that we're going to be talking about. Wasn't very volatile, was kind of under the radar. You know, everybody was talking about pharmaceutical and healthcare stocks when Joe Biden was getting inaugurated, and a little bit before as well, because we knew he was going to be president. So those stocks tend to win up, so such as BNGO, ATOS, TRXC, a lot of those other ones, and then I predicted Dare would go up. The stock wasn't volatile at all, and neither is this stock. And I'm trying to tell you that right now before you click off this video and say, "Oh, it's not going to make me triple my money in 5 minutes." That's not how the stock market works. If you want to be ahead of the game, you have to do homework like this, and I'm going to explain how I do my homework and what goes through my mind and exactly what my mind was telling me when I was, stock trading from my $11,000 all the way up to my $90,000 in the past 30 days. So I think due diligence is very important. I'm going to provide the links below for you to kind of go through and either follow along or do your own due diligence, because I feel it's very important. You need to trust your gut and you need to trust the things that you go off of, but at the same time, let's apply logic to it as well. So speaking of logic, logically speaking, GameStop is not worth $500. Everybody knows that. Okay, but we have proven that just because a stock is worth $10 doesn't mean it's not going to go up, and just because a stock is worth $50 doesn't mean it's ever going to reach it. Okay, so keep that in mind when I'm discussing this stock in particular. When I was discussing Dare, it was a sleeper stock. Nobody was talking about it. It didn't have as much volatility, but I provided the due diligence to my 100 subscribers. I'm so big, guys, and the word got out. And all it takes sometimes is for somebody to actually do the homework. Okay, so why am I interested in this stock? What made me find this stock? Okay, well, everybody was talking about healthcare and pharmacy type products. What's the next thing? Well, Joe Biden has been talking about energy a lot, right? Well, I was in high school and I had bought my first car back in 2012. So when he was president from 2008 to 2016, I saw how the stock market reacted. My dad was in the car business. I saw how gas prices went up. I saw how the market reacted. I saw how stocks reacted. I paid attention to that stuff at a young age because it was confusing and it was interesting to me. It had to do with numbers, and that's why it made me interested. But anyway, so it started giving me flashbacks. So it gave me flashbacks like, okay, if we're talking about healthcare again, that means we're going to be talking about oil again. Well, it's February. Everybody starts talking about gas and oil around summertime. Always. All the time since the beginning, it's always around summertime that everybody's talking about gas and oil. I don't know why, but it just could just be from me and myself, from my own history, but that's what I've noticed. Everybody starts talking about that stuff. So I want to be ahead of the game. I want to be ahead of the curve. And this particular company stuck out to me for multiple reasons. Last week, AMC and GameStop started falling because Robinhood and all these other companies were like, hey, you're only allowed to sell. You're not allowed to buy, and that forced the stocks to go down. But I also noticed that affected other parts of the market as well. So people who own like Apple, Tesla, and all these other big companies, the stocks went down like a decent percentage. Like Apple went from like $148 or something to like $130. Tesla went from like $880 or $870 down to $800 again, and like the entire stock market seemed to react to that. So whether that's from people taking out their money to try and get a piece of the pie on GameStop and AMC, or it was the big hedge funds trying to recoup some of that money that they had lost because we fucked them over. Either way, the stock market reacted to it. This company in particular did not. And the reason I bring this up is I feel like looking at history is very, very important when you're looking at a chart. So last 3 months, from February to November, the stock was 33 cents in November. Why? Well, they were getting close to, not bankruptcy, but they were getting close to being kicked off the NASDAQ because they were under $1 for a certain period of time. They have done nothing but go up with very, very little to no, like, YouTubers talking about them. If you look on YouTube for this stock right now, you can see that some people were talking about it like January around this area when it was $1, and it's just kind of been sitting here at $1 since then. Like, some people called it out when it was 70 cents. Like, good on them. Like, they are actually ahead of the curve. But this stock is still floating. It hasn't had the volatility. It hasn't had the action that would either make it go super high or super low. So right now, the fact that it's staying where it's at, for me, in my experience, I feel like $1 right now is a very, very good buy because, first of all, it needs to stay there, you know, in order to stay on the NASDAQ. Well, now it's been there for like a week, so it's good for like a year or whatever. But the reason why I think this is a very important number is that it was not affected by the nonsense that happened last week. And it's been on an upward trend for the longest time. So that's just looking at the charting alone, okay? And that's not the only thing that's making me look at this, obviously. So if we actually look at the things that their up-and-comings, if you will, January 13th, they basically got their contracts extended or finalized for basically long-term electric fracturing. So EQT, they're contracted with them. That's a very, very, very big company from what I understand as far as when it comes to natural gases and oils for American energy with hydrocarbon and all that kind of stuff. Very, very big company, okay? Was ranked this largest company in the world. Like, it's a big company. And then I think there's another company that they're with as well that is like number 9 or number 1. You can look at all that information that I provided in the links below. But something very important that I want to point out. So who are the competitors for this stock? You know, let's look at some comparisons. Not all of these are very, very comparable. And the reason I want to show this to you is because I think it's important. I'm going to show you how I look at my homework. So when we look at market beat here, Schlumberger stock, Halliburton, Core Laboratories, etc., you can click on these and you can scroll down and you say, okay, how does it compare to these big companies? How does it compare to these smaller companies? And what's great is there's a summary at the bottom that says, hey, 10 out of 14 factors compared, Schlumberger beats USWS, but USWS won in the other 4 factors. And I think it's very important for you to look through these that I'm also, like I said, provide in the description below, for you to look at and see, hey, where is USWS Services doing better than this company? So what is Schlumberger? Schlumberger is a company 5 years ago, when Obama was president, that was $70 to $80, right? And now it's $25. But before you say, oh, this stock worth $25, no, it's not. The stock I'm talking about right now is currently not worth $25. Okay. This company has 86,000 employees. They're also in Texas since 1926. They've been around for a very long time, and they have a $31 billion market cap. Okay. Their average volume is 16 million shares. Okay. So these are things that I look at. Let's go down the list. Halliburton. Again, Texas Energy, same thing, provision services, products, energy industry, oil production, and natural gas. That's what we're looking at. Again, Houston, Texas, 1919, been around for a very long time, 55,000 employees, and $15 billion for a market cap. Let's start going down the list, because, again, I think it's very important. This one, let's not even look at. Reason? Because, dude, it's the Netherlands. So, again, I like to look at everything. Okay, let's look at a Colorado stock. Again, another company that uses hydraulic fracturing services for onshore oil for natural gas exploration. They have 2,500 employees and been around since 2016. Mind you, Colorado versus Texas. Okay? Figure out the differences from, you know, how often Colorado is cold and how much land they have versus Texas. You know, you should be looking at all these things. And again, we're looking at it from 5 years ago. Hasn't been around for that long. But it's been holding steady, well, basically since the pandemic, has been above $8 for the most part. RPC. This one is Georgia, so right next to Texas. This stock is $5. Okay? But it was constantly going up even after Donald Trump became president, and kind of slowly started to go down after that point. But all of these stocks have, because again, it's not as expensive a barrel to collect the oil. It's not. So those are all factors that play in, obviously. when you start looking at all these things. Why is this stock worth this much? Why did it go down? So you have to do your own due diligence to look at that. But again, 2,700 employees, 1984, $1 billion market cap. Okay. Again, Texas stock, 4,000 employees. This has a buy rating on it with $1 billion market cap. Founded in 2017. What is U.S. Well Services? U.S. Well Services has 871 employees, founded in 2018. Before you say, hey, they have way more employees, they're just a bigger company. The next stock I'm going to show you is actually not on this list, because this is from me doing my own due diligence and doing a little bit further, deeper research for yourselves. So let's look at this stock, FTS International. Okay, they were founded in 2002, and they only have 1,250 employees. Again, provision oil, natural gas, well services, whole 9 yards, Fort Worth, Texas. So, again, Houston, Texas, Fort Worth, Texas, still in a similar environment. Let's go back to where it was. This company, at its lowest, has been basically around like the $5 mark. Okay, but recently they had about 800 employees a couple years ago. So if you look at their history and you look up this company and see what they're about, they're in a kind of similar boat as what U.S. Well Services is in. So right now I'm putting a buy. What I think the stock is worth. I think U.S. Well Services could very easily go to $5, given all the other stocks that are around. I don't see why it doesn't have the ability to be near its competitors. But let's talk about why I think so. So, for example, given the fact that Joe Biden has been talking about, hey, we need to be more energy efficient. We need to be very, very mindful when it comes to fracturing, or we need to have a different look on how to do things. Okay? Perfect example, Amazon has already been working on their end of the bargain. I know this is kind of a weird thing to throw out there, but they ordered 1,000 truck engines that run on compressed natural gas to test to see how it works. Well, U.S. Well Services, if you look at their website and you go down to technology and clean fleet, all right, they use electronic engines versus the traditional diesel engine to basically get this oil up. This is actually cost efficient and fuel efficient upwards of 80%. 80%. That's huge. Just read their entire website here. It causes way less emissions because diesel engines basically produce black smoke into the sky. It's just there's literally no comparison. So if you actually look at, say, for example, a diesel truck versus a Tesla, and you were to go for a ride, one's going to go further, one's going to cost less, and one's going to feel smoother. So when it comes to sound pressure, it also comes for vibrations alone. It's going to be a way smoother process. So if you have a diesel engine that's digging up oil out of the ground, it's going to cause a lot of vibrations, and with those vibrations, you could potentially break your engine from those alone. So I used to own a Honda Civic, and the motor mounts would always go bad, and other shit on my fucking engine would break because the motor was shaking around on my little 4-cylinder. I can only imagine from the G-force alone from these diesel engines digging up oil out of the ground constantly all day long. Like how much maintenance is required on these diesel engines. And now there's literally an 80% difference between the G-force for an electronic motor versus a diesel motor, and it's more effective and it's more cost efficient. So that alone is huge. If you're going to be digging up oil out of the ground, we're already, polluting the skies. So the fact that we're switching from using basically, I'm going to use this engine that requires oil and diesel to dig up this oil, so that I can use this engine to dig up oil and diesel or whatever. It seems counterproductive when you're using the same material or the same resource to fuel the motors. To me, it makes sense because it works, but now that we have batteries and we have electronic engines, it just makes so much more sense. This is the future. The future is using electronic motors versus gas and diesel motors. So that alone, right off the bat, is a huge plus side. Again, you can look at their different services. You can look at their conventional fleet, their patterns. They have a very clean website. So again, how I discussed DARE in my previous video, Very easy to look at all the different information that you're looking for. I think they even have same thing. They have the About Us history, awards. They actually have their press releases, their financial filings for the SEC. They talk about their stocks. They look at analyst coverage, the whole 9 yards. So again, it's a very, very clean, website, and I like that. And clean energy, ironically. So let's go ahead and look at what's basically up and coming, or what just got finalized. So January 12th, again, this is something that's kind of small, but only because it's not being talked about. So they finalized their contract extension in the Appalachian Basin, right? So let's take a look at some of the information that they provided just from discussing it. Together, our companies have partnered to execute Range's development. So Range is Range Resources. Okay. Where was I? They have a strategy and continue to reduce emissions, noise, and fuel consumption, so what we just talked about. And this is it right here. This is what I want to talk about. Helps in generating operational cost saving upwards of 90% in fuel costs alone. That's huge. That's a lot of money. You know how much money it costs to dig up oil? And if, like, just in fuel alone, just to get the resource you're looking for. That's huge. Just from switching to a natural gas powered hydraulic fracturing solution. Like, the way that I'm looking at, like, Tesla and other car manufacturers, the fact that everybody's wanting to buy the Tesla stock because that literally is, we all know that's going to be the future. At one point in time, we're going to all have electric vehicles. It only makes sense that when we're starting to dig for greenhouse, like natural gases, and digging up for oil, that we're going to be using similar machines. So they're already ahead of the curve. They're already ready. They're ready to go. They're already practicing what's going on. So that is a few of the factors that drew me to this specific stock. In August, they were getting ready to get kicked off the NASDAQ. Okay, I think that's a very, very important factor. But they didn't have a bunch of like people trying to hype up the stock to get it over $1. There hasn't been a lot of like special interest in this. It's just had a natural, like, hey, this is a good company. We have very, very good belief system. And with very, very little volatility and coverage, I mean, look at this. Look at their average volume is 13 million, and their market cap, I mean, it's 74 million. It's not like a crazy high number. But, you know, their earnings have done nothing but go up since basically the pandemic. And they're getting ready to have their expected earnings come very, very soon, right? This company has nowhere to go but up. During the AMC and GameStop shenanigans last week, it wasn't affected. Okay, see this? It wasn't affected at all. So this company in the stock alone has just been steadily progressing. They have the right mindset. They have the right adage on how to, you know, hey, how are we going to make this as cost effective as possible? How are we going to provide a good service at the same time as well as being regulations? And with Joe Biden being president, he's pushing for this. Even Bill Gates is talking about, like, hey, we need to start moving towards a more energy efficient like society. If we're gonna, it's okay that we're gonna want to dig up oil in the meantime because we still need it. But if we're gonna do it, let's be more efficient in that regard. So that's something that drew me towards this. This is what's next. Oil is the next thing that people are going to be talking about when it comes to Joe Biden's presidency. We're going to start talking about gas prices soon. We're going to be talking about a lot of this stuff. And he's already signed a bunch of like executive orders. I think it's like 40 now in regards to just getting shit done. So whether you believe in his principles and policies, shit is getting signed. Actions and implementations are being set. So a company that's already ahead of the curve and already practicing those things, I think is going to have an advantage over the companies that need to play catch up. Okay, so they're going to have some sort of boost. So in the meantime, let's just say hypothetical. Okay, let's say hypothetical, these companies don't practice like using electronic engines. I don't know if they do. I don't know if they don't. Okay, but if this company in particular were to have those advantages and everything on their end was working well and working fine, they'll be able to get more business for the simple fact that they can get shit done quicker. So let's just say, for example, this company's diesel engines, just a couple of them started going bad, and their fleet becomes smaller. Or let's go to FTSI, okay, because they have way less employees. Let's say this company right now with 1,250, right, and then U.S. Well Services 800. Okay, so not really much of a difference, just about 50% difference. But let's just say, for example, they're in Fort Worth, Texas, like, hey, we can't get our trucks over. We can't send this. We can't dig as much up because our shit's broken. This company's going to have an advantage because they have the tools. It costs them less to do it, and if something does go wrong, they're going to have that money set aside to fix the problem. So, coming from a business standpoint and looking at the charting, looking at the history, looking at history 5 years ago from all these other companies and what they used to be when Barack Obama was president, and knowing what happened in the oil industry and looking what happened to gas prices and all these different things, this is kind of like a double. So not only do I think it's going to go up for the reason that, hey, gas prices went up in 2008 to 2016, so I think that the stocks for these are going to go up again. That's a fair estimate, right? But not only that, they're also practicing the things that Joe Biden and Barack Obama wanted to implement. It's like, hey, no fucking fracking. No, if you're going to do it, you need to be way more efficient energy-wise. So they're already implementing, and they're already playing the game. Like, oh, okay, if we're going to be doing this on our own lands and everything, we're going to use the best tools possible. Like, to me, it just seems like a no-brainer, and that's kind of how I do my homework. I look at, hey, let's check out their website. Let's check out their competitors, right? Let's see what everyone's going. Okay, let's look at history. What are the things that are going to drive this stock forward? Okay? A few things that I think are going to drive the stock forward. Compared to the competition, I think it's like, hey, they're practicing a lot of the same things. And, obviously if you look through all these, I can't go through each one, but, click through here and see what some of the factors are. Like, hey, where is it that U.S. Well Services is winning? Where are they losing? That could show you the differences, why there's a difference in stock price. So from my calculations and looking at all these things, I think U.S. Well Services has a very, 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 very good opportunity of getting to $5 before the end of the year. At the pace that it's at right now, for the past 3 months, basically tripled in price, okay, and it's only been 3 months, okay, and it hasn't been getting as much traction as what all these other pharmaceutical, healthcare type stocks have been getting, and no one's talking about oil yet. No one is. No, like we talked about energy and we talked about all this other stuff and natural gases. No one's really talked about it yet because, quite frankly, a lot of us don't really know about it, and I think this is something to dig further into. And again, they have, in March, they're going to have their expected earnings. Their earnings have gone up and up and up, and they have estimated earnings of up to here. I don't know where that compares, but if we looking at everybody else's information, these guys are losing like $9 a fucking, look at it. they're losing so much money, and their stock is still super high. We look at this other one. Let's look at this. This one's actually making 15 cents. So again, that makes sense why it's $11. In my opinion, that's just what I believe. But again, this company here losing 8 cents, losing $1, or not $1, sorry, losing 8 cents, losing a cent, and this stock is at $5. So if this stock is $5 and it's making about that much money, for me, I'm like, okay, if their expected earnings are going to be close to that number again, around that under the 10-cent mark, I think it's worth a $5 stock. Obviously this company is making money, so it makes sense that it's a $25 stock. I look at those things. How much money are you making? Why is it that your stock is worth what it's worth? Look at all these things when you're doing your own due diligence, doing your own homework. So again, it's the middle of February. Well, no, it's the beginning of February, and they have their earnings coming out in less than 3 weeks. So I think they have a very good opportunity. They've progressively been making money. They've obviously practiced their craft and their new they have their contracts extended and everything. They have, they're hooked up with EQT. So I think they're headed in the right direction. I think this is a sleeper stock. So I suggest, again, doing your own due diligence, doing your own homework, and hey, leave a comment below. Tell me how you did on the last stock that I shared and other stocks that I've talked about, and tell me if you know a thing or two about the oil industry, or if you know somebody that works at USWS Services. Feel free to let us know. I'd love to make another video. I'd love to do a follow-up video. But for full disclosure purposes, I have 52,000 shares. I moved most of my other money to Webull. I'm waiting for this to transfer over to Webull as well, because I don't want to deal with Robinhood anymore, because I thought what they did was very wrong. So I'm just waiting for that. But yeah, I will provide those links below, and appreciate anybody sticking around, and let me know. Thanks, guys.